So I had someone come in the other day, and they've been with this company for 15 years. Their house was valued or insured at $800,000. It's a $550,000 home. So they're paying, like almost $350,000 more.
They're insuring a $350,000 asset that doesn't exist.
Doesn't exist, and so
it'd be like somebody driving a BMW or driving a little Volkswagen, and they got the insurance on a BMW.
Exactly.
Right.
Yeah. But so what's great about being a broker and having someone like myself is I review it every single year. A captive agent is not going to review it every year because most often you should expect your insurance premiums to go up to about 3 to 7% a year. They don't want to call you and say, hey, guess what? You're going up 10% this year, because you're going to start shopping. So they just won't call you.
Starting your route to retirement.
Hello, everybody. I'm Dean Barber, founder and CEO of Barber Financial Group, your host of the Guided Retirement Show. Welcome. Today, we are going to be talking about the very basic fundamentals of financial planning and the foundation of a good, solid financial plan, and that is proper risk management. Joining me today will be Jason Newcomer, certified financial planner and also director of Centralized Financial Planning at Barber Financial Group, along with Darren Newell. He is an insurance agent with Midwest Professional Insurance. Enjoy my conversation with Jason Newcomer and Darren Newell. All right, here we are on the Guided Retirement Show with Darren Newell, insurance agent with Midwest Professional Insurance, Jason Newcomer, certified financial planner, director of Centralized Financial Planning at Barber Financial Group. Gentlemen, we're here today to talk about risk management. So Darren, first of all, welcome. Good to have you here.
Hey, thanks a lot, Dean. I appreciate it.
You betcha, Jason.
Yeah, good to be back.
It's always good to see you.
Yeah.
You and I talk on a regular basis. Darren, you and I see each other quite a bit. Mm-hmm. And we all have this common theme of what we do. And it is I'll call it a holistic approach to wealth management. And a big part of wealth management is risk management. Mm-hmm. And how do we mitigate risk in our lives? And I know when some people hear the term risk management, and Jason, I'll go specifically to you for this one, they think risk management is how do I manage the risk in my portfolio? Because most people think that wealth management is all about money management, because that's what our industry has done. It's trained people to think, wealth management, that means investment management, but it's far beyond that, isn't it?
Yeah, it is. I mean, you're right. People think when they think of financial planning, I think initially your focus is on the investments because that's kind of the engine that drives the plan forward, but that really is just a part of the overall plan. The plan doesn't work if it's just solely focused on investments.
All right. So from a certified financial planner's perspective, Jason, talk about risk management. And how do you view risk management, and how should the individual consumer out there view risk management? And if you want to do it and break it up in age groups for us, you can, because I think that risk management to the 25-year-old means something different than risk management to the 60-year-old.
I think so. There's all sorts of different types of risks that are out there. When you talk about risk management from a retiree's perspective, I think your mind goes to downturns in the stock market. How's that going to impact their investment portfolio and their future income security? It might include an early death, maybe a death of a spouse or something like that, loss of income. It could include a health event, long-term care, stay, something like that. If you're talking about a younger person, though, the focus on risk management might be on, I'm starting a family, I'm recently married, I want to make sure that I'm protecting my family in case something happens to me, so I'm looking at term life insurance or disability insurance. That's where a lot of the risk is, protecting the future security.
It's interesting. So, and I noticed that you didn't mention anything about property casualty. Is that because you don't like Darren?
It's nothing personal.
None taken.
But okay, seriously though, Darren, that happens all the time. Yes. Now, people are required by law, if they have an automobile, to insure that automobile. Why is that?
Why? Because they have to. I mean, in order to drive a car to get a loan, the lien company requires you to have insurance because there's got to be someone payable because they're actually the loss payee on that vehicle. And then there's also liability. The state requires liability limits, personal injury protection limits. You just have to have that. It's a state requirement.
So in your world, that's your risk management.
Yes, it is. I mean, he made something very what he said about liability limits and risk is, especially younger people think, well, I have full coverage. What does that mean? You know, you could have full coverage, but your liability limits only be 25,000, 50,000. And if you break that down, that means if you got in an accident and you hurt someone, then only that first person in the vehicle that you hurt, it gets $25,000 up to $50,000 for everyone else in the vehicle. Well, we know today there's litigation, there's medical expenses. If you exceed that $25,000, $50,000, then the rest of that is out of pocket. Being fully covered, there's a lot more to be said about that.
So what you're saying is the risk there, if they have those minimum
Requirements,
coverages that are required by law, they're exposed in the event that they have an accident and somebody's injured because they've got those limits of coverage. And if they exceed those limits of coverage, then they're going to go after that person's assets and what else?
Future earnings.
And that's a big deal.
Yeah, it is a very big deal.
So, Jason, I know that whenever you're completing your financial plans for people, you're actually reviewing the property casualty insurances. And I think that it's got to be weird for somebody. They come in and here's Jason Newcomer, certified financial planner, and I'm thinking I'm going to go in and talk to him about how I'm going to become wealthy and how, I'm going to stay independently wealthy or whatever. And Jason's asking me for my declaration pages for my property casualty insurance. They got to be thinking, what is this guy? I mean, he's not a property casualty guy. What kind of reactions do you get from people when you look at that or when you ask them for that?
Yeah. Why do you need to know that? Why do you need to know if I'm paying for that type of policy or this type of policy? But, I think of a big part of our job as financial planners at the end of the day is to not only help to build the initial financial plan, but then to kind of come in and be the one that says, well, how can I break this? Like, what could potentially go wrong that sends this thing off the rails? Like, where's the risk? And some of it's obviously out of our control, out of our client's control, if it relates to the economy or the stock market. But let's focus on the things that we can control. What happens if someone gets sick, right? Or what happens if there is an auto accident? What happens? We had a really bad winter this past year. What happens if your car is responsible for a 5-car pileup on the highway, right? It's something totally, very obviously a rare occurrence, but something that could devastate someone financially. And all the effort and hours that we've spent talking about budgeting and tax projections and financial planning for the next 30 years. Yeah.
Gone.
In a split second.
And you don't want, and the thing is that and people can have insurance, but they can have the wrong insurance or the wrong amounts of insurance. And one of the things that I think, Jason, from a financial planning perspective is most financial planners don't take the time to review the property casualty coverages that people have, right? And because there's nothing in it for you.
Yeah, I think more and more it's just kind of a check the box CYA, right? We asked the client, did they have property and casualty insurance? Did they have the umbrella liability insurance? They said yes. Okay, check it. Let's move on. But that's maybe the extent of the work. But really we're more interested in, well, let's see the type of coverage that you have, the policy limits on your coverage. Let's look at your net worth and your future earnings, as Darren alluded to earlier. The wage garnishment with a lawsuit or something like that can be financially devastating. So that liability insurance, we talk about, well, $1 million, $2 million of coverage. Maybe that's appropriate for someone who's got $1 million or $2 million of assets. But what about the person who's just graduated from medical school and has $250,000 of student loan debt, right? There's still a huge need for that insurance.
There is, absolutely.
Tell us more, Darren.
Well, I just what he said, with someone with that kind of potential earnings coming up, to have that umbrella. And, God forbid they are working that midnight shift to 6 a.m. They're tired in the morning. They run through a stoplight and take out a family's, going to school and cause a lot of injury. And of course, there's going to be litigation. And of course, they see, wow, this guy's a doctor. He doesn't have an umbrella policy, because typically a lawyer sees an umbrella policy and they kind of shut it down after that because they know that's what they can get. But I would say with a doctor, I would go a little higher than $1 million, because that future earnings for a young doctor is exponential, and that could be taken away from him all the way to the time that he retires. So I would highly recommend that.
Well, if it's taken away from you, you might not ever be able to retire.
Right. Exactly. I don't know if I want that doctor at 75 either.
Yeah. So, Darren, from your perspective as a property casualty agent, someone that looks at risk management more from a holistic point of view and really diving into the coverages and asking a lot of questions, talk to me about some of the things that you see that maybe surprise you when you start reviewing coverages that people have today.
I think the biggest surprise to me is the liability limits, and they don't have an umbrella. You know, at 45 years old, they've got 2 kids driving. That to me just scares me, because those kids are part of that policy, and we all know kids aren't the best drivers. I mean, it's the reason why their premiums are the highest.
Can you break it down for our listeners and our viewers on YouTube? What you mean when you talk about an umbrella policy? Talk to us about what that does and why you think it's critical, and then the cost.
Sure. The umbrella policy, so typically you have your underlying limits, which in order to get an umbrella policy with most insurance companies, you have to have what I call 250-500. That's $250,000 for the first person in the vehicle, up to $500,000 for everyone else in the vehicle that's been injured. So after that, if those limits have been exceeded, that's when the umbrella policy kicks in. So that, that's for lawyers, litigation, any medical bills, all of that.
And so your umbrella policies are typically what, $1 million?
$1 million is typically the average, and depending on the household, if it's just a husband and wife, they're anywhere from $175 to $225 a year. And if you've got 2 kids, they can get up to around $400 a year.
But that's really inexpensive,
Very inexpensive
to get that extra $1 million of coverage. Okay, so you explained that for an automobile. How does that work on personal property?
Umbrella's the same.
A renter's policy or something like that.
Yeah, an umbrella covers everything that is underneath that policy. So that's your home, that's your auto, that's everyone that's insured there as well. So for a great example, someone has a pool. If you don't have an umbrella policy,
yeah, I have a pool.
Yeah, if you don't have an umbrella policy, you need one immediately. I mean, the worst kind of accidents happen in pools, and so that typically on a home, $300,000 is what I would recommend to have on liability coverage. You can go all the way up to $1 million, but then you can also add that umbrella on top of that. And that's extremely important.
Is the same umbrella policy that goes on the car is the same umbrella policy that goes on the home?
It is, but you think, well, I had an accident this year and I broke into that umbrella policy. That umbrella policy is covering also on the home as well. It's just not one limit. So if you have an accident over in the car, you have an accident over in the house, you get $1 million for the house, you get $1 million for the auto. It's not up to.
And so it's a per occurrence type of a thing,
yep.
And it's not a lifetime limit or something like that. So it could be done
every year. It renews.
Okay.
Typically, if you don't have $1 million umbrella policy, for a few years, you can't just come in and ask for a $3 million policy. We've got to start at 1 or 2, and with good insurance history, that's when you can start adding it up to $3 to $5 million. But $5 million is typically the highest they'll go.
Well, Jason, let me ask you the same thing from a financial planner's perspective. When you're gathering documents and you begin to review the property casualty insurance, what's your biggest aha? What do you see that people are missing?
Yeah, I think for me, when you start asking someone for their insurance policies and declaration pages, and the question comes up, well, when's the last time you looked at your coverage? When's the last time you assessed whether or not your coverage was adequate, or whether or not you were getting maybe the best deal on your premium or something like that? And oftentimes it's, well, I can't remember the last time we looked at that, or looked at it 5 years ago and nothing was close, so haven't looked at it since. And we were talking offline about that.
Yeah, that's very interesting. So I just had a client who's been with a captive insurance agent for probably the last 15 years.
Explain captive. Don't use things that are.
Well, I don't want to get us in trouble,
well,
but
it's somebody that sells insurance for a specific company, and that's all they can do.
That's all they can do.
Yeah.
It's like for me as a broker, I've got 7 to really 10 different carriers, but typically I use about 7 for the most part in this market, where I get to shop for you, take it out to the market and see what's going on and try to get you the best rate. But if you're with that captive, let's say for the last 15 years, typically they're going to add 3% of value onto your home every single year. Now, I don't think the housing market increases that way. I mean, it has this year, but for the most part, in 5 to 10 years, your house is already overvalued. So I had someone come in the other day, and they've been with this company for 15 years. Their house was valued or insured at $800,000. It's a $550,000 home. So they're paying, like almost $350,000 more.
They're insuring a $350,000 asset that doesn't exist.
Doesn't exist, and
It'd
so
be like somebody driving a BMW or driving a little Volkswagen, and they got the insurance on a BMW.
Exactly.
Right.
Yeah. But so what's great about being a broker and having someone like myself is I review it every single year. A captive agent is not going to review it every year because most often you should expect your insurance premiums to go up to about 3 to 7% a year. They don't want to call you and say, hey, guess what? You're going up 10% this year, because you're going to start shopping. So they just won't call you. My job, and I have the luxury to say, yes, your insurance is going up 10% this year, but this company over here is actually going to save you a few $100s a year with the same coverage. So
I want to ask you a question, if I can, about the gig economy, because we work with a lot of retirees that they're leaving maybe a high stress job, but they're not ready to sit at home and do nothing all day. So those people might be interested in just staying social, whether it's driving for a ride share company, something like that. Maybe they've got a second home that they want to rent out on Airbnb, and they think, well, I'll just do this and not really think too much about it. But can you talk about the things that they need to be aware of in terms of either their insurance coverage or changes that they need to be making to those policies?
Sure. Yeah. If you're doing a ride share, please tell your insurance agent immediately, because God forbid something were to happen and that insurance agent finds out that, you had that Uber sign in your car, they're going to deny you, or they'll cover the claim, but then they're going to drop you. So just by letting your insurance agent know, it is going to increase your premium. And same thing with a second home that you want a VRBO or Airbnb, you need to change that type of coverage, from a homeowner's policy to a landlord policy. And depending on how often you're going to rent it is obviously going to change some of the rates. If you're going to rent it 181 days of the year, or you're going to rent it 365 days of the year, just really all depends. But typically I actually had someone do that the other day, and it really only increased their premium about $100. So it just really depends. But again, it's covering yourself in that risk mitigation or almost elimination by staying up on your policy. That's why it's important to review. That's why every single year I call, what's going on in your life? What has changed? Have you got a new roof? Because if you've got a new roof and you didn't tell me, that's gonna lower your premium quite a bit. Are you renting out that lake home? That's gonna change. And if something were to happen down there, and that guest says, yeah, I slipped and fell or cut myself because that stair wasn't repaired properly, like, well, the policy doesn't say that you were renting that house out. That's a big deal.
What if you just have somebody that is a family member that you let stay in the place for a weekend? That's
covered. You're not charging them. You're not making any money on it. That's totally fine.
Yeah, I just want to make sure.
Yeah.
Got to make sure that's covered.
Right.
So this risk management piece, I know that nobody ever buys insurance hoping to file a claim, right? Now, the only one that I can say that I've ever heard somebody say that they were ready to file a claim on was a new roof, right? God, this roof's going to need to be replaced in 5 years. Man, I wish I'd have a hailstorm, right? I mean, but I've never heard somebody say, man, I got this health insurance policy, I can't wait to get sick. Or I got this life insurance policy, I can't wait to die. I got this car, I got this brand new car, and I got good car insurance on it. I can't wait to crash this thing and get into the insurance company's pockets. But one of the things that I know frustrates me and probably every person in America is that anytime you have an insurance claim, the insurance company almost always wants to fight you. They almost always want to investigate. They've got a lot of questions. So Darren, why? Is it fraud
There is a lot of fraud.
Okay.
There's a lot of fraud. I'm sure even you've had this happen in your neighborhood where someone knocks on your door, a roofing company that you've never heard of before, that you probably can't even find them on the BBB, that is saying, hey, a hailstorm came through last week. I'd love to take a look at your roof. And they get up there and they say, yeah, there's hail damage. But really, maybe there wasn't a CAT code. And a CAT code is a catastrophe code that is labeled like last week even. Those high winds that came through with all that rain. that was a cat code. And so there's legitimate claims going on out there right now because of that. But, there's companies out there trying to prey on the people that don't know. You and I can't stand on the ground.
Is it the companies that are preying on that, or is it the consumer that files fraudulent claims?
Kind of both. Absolutely. Like the biggest one is the biggest fraudulent claim is jewelry. There's a $20,000 ring that it just went somewhere. We have no idea what happened to it. That happens all the time. Rates are going to go up after that because insurance companies.
Your son stole it and sold it to pawn shop. That's what happened.
Exactly. But yeah, take a look at who your carrier is as well. If they're an A+ or better rated company, they're going to come out and they're going to take care of the claim. Every one of my carriers is an A+ carrier, and I rarely had any pushback whatsoever. They want to get it taken care of. They want to get your house back to normal. They want to get your car back to normal and get you back to living normally, because the longer you're not in your house, the more money they're going to pay, right? They want to get through this just as bad as you do. So, because they don't want to pay any more money than they absolutely have to. So,
Jason, have you ever run into any examples of people that didn't have the right kind of coverage? Something happens and now they got big problems?
Any example I can think of, thankfully, was caught before anything bad happened. I don't know if it's just I'm the luckiest person in the world, so because they came to me, nothing bad happened. But oftentimes those things come up in these reviews that we have with clients. It's let's take a look. It's been a year or two since we've looked at your property and casualty insurance, maybe your policy limits, and like Darren said, just having open lines of communication, I think, between the client, the trusted advisor, the insurance agent. Everyone's talking together and all on the same page, and everything's out there in the open. You can really minimize the chances of something going off the rails.
Yeah, I have a really good example of that. I had it's now an insured of mine, but came to me and said, we'd take a look at my policies and take a look at their policies. Started to get to know them. What goes on at your house? Well, I've got 2 kids. I live on 5 acres of land. We've got some 4-wheelers, some quads. And I was looking at his liability limits, like, you don't have enough. You really don't have enough. And lo and behold, about 6 months later, someone flipped an ATV. Now, granted, it didn't go over the liability limits, but it's an example of what could have happened. And if he didn't have that umbrella and something worse would have happened, he would not have been covered. Now, obviously, that family has an umbrella and their liability limits are a lot higher, but yeah, it takes someone that actually cares to want to sit down and talk to you and find out what's really going on in your life, and to educate you of really the risks that are out there.
So one of the things that we always look for as fiduciaries, Jason, is abuse in our industry, right? As fiduciaries, our job is to always make sure that we put our clients' interests ahead of our own, right? And that we get compensated from our clients and not from product manufacturers or anything like that. And so, Darren, I got to know in the property casualty insurance space, are there agents who you think maybe not intentionally, but they're not fully representing? I guess what I'm asking for, is there abuse from the insurance agent side out there that
Absolutely.
The consumer needs to be aware of, and what would you look out for?
What I would look out for is an agent that doesn't call you every single year and has your best interest in mind. I mean, again, you go back to those captive agents. That $800,000 house that they're paying $5,000 a year on, I just dropped their premium down to $2,000, and they have adequate coverage. I added.
That's a decent family vacation that they're now able to take because they're not sending the money off to the insurance company unnecessarily.
Yeah, exactly. So again, those captive agents, they have no reason to call you. So when those rates go up, they just hope you don't call them and ask them why. And so, part of my job is to call them up and let them know what's going on and take care of them.
You ever seen any abuse in that area, Jason?
Oh, I'm sure I have. Yeah, absolutely. I mean, just in any industry, anytime there's sales involved, sometimes there's going to be conflicts of interest, but there truly are people that are out there working for you and your best interest.
Mm-hmm.
Darren, okay, from a property casualty perspective, talk to our listeners a little bit about the importance of coordinating that property casualty insurance with the overall financial plan. In other words, working with the certified financial planners that we have here at Barber Financial Group, and the way that the client's able to say, oh, well, we're looking at everything, right? And we're not just buying insurance because we've been told we should buy insurance. We actually understand why it's there. So what's that experience like for you and for the clients that you get to interact with that are also part of Barber Financial Group?
I think there's a lot of ahas. Just what I was talking about earlier on that $800,000 house. That was someone from here.
Yeah.
That, wow. And I haven't reviewed it, and it's nice to get a review. It's nice to be able to talk to someone once a year to find out what's going on in their life. Things change in your life all the time, and if you're not having an open dialogue with your insurance agent, something may have changed. You may not have told them, and you're not covered. So I think it's very important, and it's really been a lot of fun, and it's usually a very great conversation about insurance, and typically, believe it or not, we usually save them a little bit of money, which is even a more fun conversation. So
yeah. The whole 15 minutes, we can save you 15%. I don't know if we're allowed to use that slogan or not, but everybody knows who we're talking about. I mean, the marketing brilliance there, for sure.
Yeah.
All right. So what else do we need to know? What else do our listeners need to know about property casualty? Or Jason, if there's something else that you'd like to expand on more on risk management beyond property casualty, I think this would be a good venue to do it.
I think the biggest takeaway that I've got with this topic is to not be scared or hesitant or to actually take the time to go through and review this. Or if you don't want to do the legwork, I know of a lot of clients that have gone out and tried to do this on their own online, on one of those search tools, and usually it's not the same results as actually having an independent broker take a look at those things. And I'm sure you've seen that too. But it's a worthwhile endeavor. I mean, take the time, spend the time, and do the research.
I think from my perspective and why I put the company together the way that I did, and why we've got Darren in here looking at this, is that I think if people can understand that when we're looking at your insurance, we're looking at it purely from a risk management standpoint, that there's not reward for us as the financial planners in selling insurance. We get nothing from anything that Darren does. But if that individual consumer can sit back and say, I finally have an advocate that is somebody that's truly looking out for me, that understands what my risks are, and I'm just trying to insure those risks, and I don't have to fear that I'm being sold something. And I think that is probably the one thing that most consumers say, is that insurance salesmen, they just want to sell. They just want to sell. And the industry did it to itself.
Yeah.
So have you gotten that kind of feeling from people?
I have, but in about 5 minutes, it kind of goes away because I want to get to know them first. I want to have a relationship with them. It's not wham, bam, get out, off to the next sell. For me, it's getting to know them and make sure they're properly covered. I mean, you and I had a conversation yesterday about an insured where, on their liability limits, they were adequately covered, but under uninsured or underinsured motorists, they were, I thought, a little undercovered. And that's a question. Regardless, if they decide to move over with me, they can at least call that other insurance person and say, you know what, I'd like to increase this. And I've had many conversations just reviewing insurance with some of the clients from here. Is like, I recommend doing this, or I think you're really in the right spot, but maybe do something here. If you really have that great relationship that there's a lot of people like, I grew up with my insurance agent, and well, then ask them to do this for you.
Yeah.
And that's, to me, that's more valuable. It's more valuable for you and the whole company. And, eventually, they'll probably tell someone about me, and maybe I will get a sale.
Yeah.
But that's not the big thing.
Well, gentlemen, Jason and Darren, thanks for taking the time to spend with our listeners to the Guided Retirement Show, our viewers on YouTube. Great information. I would encourage anybody, obviously, that hasn't gone through that thorough insurance review, start with one of our certified financial planners. Jason here is the director of Centralized Financial Planning at Barber Financial Group. Everything runs through his eyes at the end of the day. That'll get to Darren, where we're really analyzing those policies, and in a lot of cases saving you money. And the most important thing is making sure that you've got that very baseline of a financial plan put together, and that is adequate risk management across the board. So appreciate you both being here.
Dean, thank you very much. Appreciate it. Thanks, Jason.
If you'd like to schedule a complimentary consultation with one of our certified financial planners to begin the process of making sure that you're fully covered and adequately covered without the fear of being sold anything, check us out in the show notes for a complimentary consultation. If you'd like to reach out to Darren Newell directly, there will also be a link there to reach out to Darren Newell. If you're joining us on YouTube, give us a thumbs up and a subscribe, and share this podcast with any of your friends and relatives who you think the content was pertinent for. Thanks for joining me.
Starting your route to retirement.
Investment advisory services offered through Barber Financial Group, an SEC-registered investment advisor.